It's March 3rd, JLD here, and welcome to MSTR. Today in the Treasury Titans, nothing in this video is financial advice, but Michael Saylor wants us to know that orange is the new black, and that is black with a capital Bitcoin B. So let's go, Michael Saylor. Keep wearing that orange. And speaking of strategy, amazing individuals, $5,005 billion in Bitcoin reserves, says Fong Li. Symmetry is rare. Conviction is rarer. I love it. He's just kind of going ahead and saying, we have nothing but conviction in Bitcoin. We are going all the way with this. Stretch is dominating the airways. It had an absolutely amazing day yesterday. It'll be interesting to see what Stretch does today with a little dip in Bitcoin price, but only time will tell. And I just want to be very clear to everybody listening. I am very long Fong, period. Zinc says, it's only a matter of time before MetaPlanet's Mars product joins Strategy Stretch and funneling hundreds of millions of dollars a week into the Bitcoin network. Both will give Bitcoin a perpetual bid, pushing it much higher. I think about this a lot. MetaPlanet will roar again, and it was up 9% yesterday. Very strong. Bitcoin Teacher says, let me get this straight. The dialogue for months was once Bitcoin goes under 70K, Saylor and MSTR go bankrupt and start selling Bitcoin. So far, he's bought more than ever, raised dividends twice, stretches back at 100, and ATM is turned on. But tell me again, Twitter guru, how he's going to sell his Bitcoin soon. Just the clueless FUD out there. Mark says, Stretch ended the day with 142 million in volume, nearly all of it above par, which is huge. It was the highest volume day since February 12th, around the last ex-dividend date. Now, this is huge because 142 million, massive number. We typically don't see these numbers until 1 or 2 days before the snapshots for people getting the actual dividends. So the fact that we're getting this 10 days, this is 10 trading days before the snapshot, is absolutely insane and bullish in such an amazing way. Zinc says, just another 3,000 Bitcoin, no problem. And now Stretch is back at par and will likely stay there for the next 2 weeks. We are witnessing history. I think so too, Zinks. Mike Elfer says, ISM PMI at 52.4. We are in expansion mode. Get long, stay long. This economic boom is broadening. And Mark says, MSTR has increased its Bitcoin holdings by 7.2% so far in Q1. The pace of purchases is accelerating compared with the previous 2 quarters. You can see it's just going up faster and faster. And with Stretch humming, it's going to keep on rolling. And just picture what happens when Bitcoin sentiment and price shifts. Stretch will do 500 million, says Dan, of volume per day in a bull market and buy unlimited Bitcoin. So Stretch will buy 500 million of volume per day in a bull market and buy unlimited Bitcoin. This is Dan Hillary, whose great video clip I shared with you yesterday. I will say, unlimited Bitcoin is going to be determinant on how big of a capital base that strategy can create, which is why it's continuing to ATM MSTR, because it needs a massive capital base to keep buying Bitcoin at crazy levels with Stretch. Rob says, strap in, ladies and gentlemen, all-time high by March 31st. We're about to witness what Bitcoin does when Stretch places a constant daily bid under it. The reflexivity is commencing, and everyone is peak bear, peak fear, peak short. Iran war started, not the end of the world. New Fed chair will start to be priced in. Deflation rate cuts coming. March will be one for the record books. If I'm right, I'm going to invite you all to Toronto for a steak dinner. All of you, all 8,175 followers, bookmark this, give me a follow, and join in our celebration. And I wrote strapped for cash, LOL. 100% invested for this bull. Let's go. Walker says, and so it begins. Got Bitcoin, and you can just see this incredibly ugly red paint. And bloop, there's the green. Is this the turnaround? Only time will tell. Adam says, Stretch will be printing Bitcoin all week. The amplification of Bitcoin is leading to a 22% premium on EV MNAV basis. These two forces will allow MSTR to raise another few hundred million this week. There will be a bigger Bitcoin buy next week, 1 million Bitcoin by end of year, totally in play. And Grain of Salt says, interesting dollar levels on MSTR, 50-day and 200-week moving average are the same at 148. Once we cross 148, trend could be confirmed. MSTR, I bet, flipped bullish in January. So let's all get going towards 148. Matt says, and this is Matt Haugen of Bitwise, Feels like sentiment has shifted on crypto. Short and sweet. Satoxic says the Clarity Act passing in March will unlock $3 trillion in sidelined institutional capital, money waiting for legal clarity. Once approved, banks, asset managers, and corporates can deploy at scale. Stablecoins become the rails. Crypto prices will go parabolic. Bullish, bullish, bullish. Mark says weeks with Stretch ATM activity are becoming increasingly infrequent. As you can see, Stretch is beginning to poke its green head up much more often. And James says, I thought these were safe havens with gold going down 1% in one day and silver going down 6%. Doesn't sound like a non-volatile asset here. Jeff says, strategy tracking day 495. MSTR is now ranked 236th of the U.S. company by market cap, the 18th largest publicly traded company by volume, a disconnect of 218 companies between market cap rank and liquidity rank, probably nothing. So again, MSTR jumped 12 spots yesterday when it went up 6.2%. But what's crazy is that it was the 18th highest volume. So it's number 236 market cap, but it's number 18 by volume. So there's a disconnect there that will be closed. It absolutely will be closed. And we have a great clip coming at you from Michael Saylor when we get back from thanking our sponsors. If you're building in the Bitcoin era, structure matters. Treasury strategy, capital allocation, entity structure, it all starts with a solid foundation. And when you're ready to form your business the right way, Northwest Registered Agent helps you do more than just file paperwork. With Northwest, you don't just create an LLC. You build a complete business identity from day one. That means registered agent service, a real business address, operating agreement, domain, website, professional email, phone number, and built-in privacy. No juggling vendors, no sketchy upsells, no selling your data. They've been doing this for nearly 30 years, and they're the largest registered agent and LLC service in the US with over 1,500 corporate guides, real humans who know your local laws and actually pick up the phone. Northwest handles everything in-house, which means fewer hands on your data and privacy by default for every customer. Don't pay hundreds or thousands of dollars for what you can get from Northwest for free. Visit northwestregisteredagent.com/JLD free and start using free resources to build something amazing. Get more with Northwest Registered Agent at northwestregisteredagent.com/JLD free.
If you're a capital investor, you got no dividends and you lost 45% of your wealth. Just wait for 10 years, you'll be fine. I'm okay with it, but your 3-year-old's not okay with it. On the other hand, look at STRC, right? STRC is for everybody else. It's actually lost 0% of its value. It's paid 4.5% in dividends through a very bad, big capital market drawdown. Since the beginning of the year, same story. STRC holds its value and pays a dividend. Bitcoin's down 25%. Do people want this stuff? Well, it's trading 130x more liquid than the average preferred stock and 1,000 times more liquid than the over-the-counter preferreds. This is, in fact, the most successful, most liquid preferred stock probably in the entire century. Okay, and this is 6 months old, right? And I would love to tell you we knew what we were doing, but what I just showed you was we were running from risk, from credit risk, until we got to prefs, and then we were chasing after the ideal product until we got to stretch. And so at the end of our journey, after trying 10 different things, we found the 11th thing, and then the market told us they liked this. We didn't know that they'd like this. Stretch is seasoning. The health keeps improving. Here, what you can see is that each month that goes by, it spends more and more time in its target range. The volatility strips off. It holds its principal value much higher. And so what are we competing against here? You're competing against a multi-trillion-dollar universe of credit instruments. Most of them yield 3, 4%. Most of them have long duration. The world of credit hasn't changed much in 50 years. You're trapped in the 20th century. Most credit instruments are created by issuers whose objective is to pay you the least amount they can with the worst tax treatment. Right? When a conventional credit issuer issues credit, they're keeping the tax benefit to themselves. They're minimizing what they pay you. And the irony is when it's over the counter, it's illegal for you to buy it. Huh? Say that again. Most credit, it's manufactured to be awful, very tax inefficient, and it's illegal for you to buy it. Well, why does that even happen? That's just the way the world was 30, 40, 50 years ago. What we've done is flipped it on its head, and our view is, well, we actually want to pay you the highest possible dividend, make it tax deferred, and make it easy for you to buy it, right? That is the credit revolution. So why do you have to wait 10 years to find out if you get paid back? I mean, strip the duration down to a much shorter amount, increase the dividend, and then make it easy for the individual. So what's the tax equivalent yield on this? If you're a company, well, let's just start with the number. It's 11.3%. If you're a company, that's the same as getting paid 14.3% because you don't have to pay corporate income tax on this. If you're an individual in Miami and you are able to defer the 37% federal income tax rate, it's like a tax equivalent yield of almost 18%. How's it compared to everything else? Well, you can see it's anywhere from 50% to 4 times better than all the other credit in the world, right? And the next best thing is like private credit, which is sort of illiquid, and it's half as good for a taxpayer, and it's 60% as good for a non-taxpayer, just on the basis of yield. What if you're lucky enough to be an individual living in New York City? Okay, digital credit is like a bank that pays you 23.3%. If you live in San Francisco, it's like a bank account that pays you 22.6%. Okay, so as you can see, this is 4 or 5 times better. Okay, what else did we discover? Well, when you create an instrument like this, it's return of capital. It means that you collect a dividend, you defer the tax on the dividend, you reduce your basis in the instrument, and after 10 years, you've reduced your basis from $100 down to zero. If then you die and pass this on to your heir, they get a step up in the basis, and it steps up to $100, and they can start the same depreciation again. So you actually get the benefit of shielding your 10 years of dividends, and then your heir gets to shield another 10 years of dividends. Now, I'm not suggesting that you run this on 10-year cycles. But what I am suggesting, more to the point, is the difference between investing $100 in a T-bill and holding it 20 years versus investing $100 in Stretch and giving it to your heir and them holding it 20 years is, at the end of the 20 years, your heir has $922 of Stretch, and their income each year is $100 versus $3.75. What's the second best? There is no second best.